Good afternoon, ladies and gentlemen. A very warm welcome to you. We are on the fag end of June of what has turned out to be a fantastic month, not only for the Nifty, but also for the broader markets as well. In our special series of Market Masters, we get you to meet the finest brains on the Lal Street, professionals who've made money in all sorts of markets, bull or bear, volatile or plain, as difficult as they can be, and they've created immense wealth for their clients as well. We are delighted to welcome Mr. Nischal Maheshwari, who's been in at the Lal Street for the last about 35 years. He's navigated all sorts of markets and created immense wealth for all his clients, including himself. Namaste, Nischal ji. A very warm welcome to you. At 9 months high on the Nifty and running in gains for the 4th month in a row. What do you think is the thought process at Dalal Street at the moment against the backdrop of possibly a large trade deal with the US?
Thanks, Shell. Thanks for having me on your show, and thanks for the kind words. I think market is very evenly poised. I think the kind of resilience Indian markets have shown over the most, I think, turbulent times, at least in the last decade. I would say after 2008, I have not seen this kind of turbulent times. And market has shown amazing amount of resilience. And not only India, but across the world, I think the resilience has been very strong. So this shows the kind of strength, the kind of strength the investors also believe is there in the market, in the economy, particularly in India. I think it's shown really good strength. Now, come July 9th, I think it's going to be a very major event where Trump will decide whether he wants to go ahead with tariffs with the countries who have not already signed a deal with him, or whether he would delay it. I think he has got quite a few successes in his thing. I think he's close to signing something with India. That is what he's announcing. He's close. He's already signed something with China. So I think the three major trading blocks with him. Europe is yet, there is little visibility, but I see at least the three main trading blocks with him. I think two of them he's already sort of got into a understanding. So let's hope that he extends this and there are no major hiccups.
Nishal ji, I would also like to have your view on these two major disruptive events that happened in June and May, and the reaction that the markets gave. The India-Pakistan clash that happened in the early fortnight of May, and the Iran-Israel US pain that we saw in the early part of June. In both these instances, our markets recovered quite sharply. In fact, in the middle of the conflict, what message do you think are stock markets sending to sensible long-term investors when you see this result after a major fight, and of course crude oil prices also hitting 6-7 month highs during that occasion?
So, Shell, historically, if you see, none of these wars basically, I'm saying these were skirmishes. I wouldn't term them as a war basically, because each of them closed within 3-4 days. So I think these are more border skirmishes than anything else. I think maybe something more serious between Iran and Israel, but between India, Pakistan, it was largely a border skirmish kind of a thing. And but historically, if you go back, none of these wars really matter much on the global economy till something major disruption happens. So if you look at it, Russia-Ukraine war is going on for 4 years. I think market is already forgotten. Nobody is really worried about what's really happening out there. And that war just continues to be, it's a 4th year, I think now, where they are sparring. But if you really look at it, I think I was a bit concerned about the Iran-Israel, because the Strait of Hormuz is there and Iran has some amount of control there. But today I think there is one very clear thing which is coming, that there is very little room for a war or this kind of a thing happening across the world. I think most world leaders do not see this as an outcome of anything, or the outcome of this. And that's why you find basically somebody intervening and closing it out very clearly. So everybody just flexes its muscles, and thereafter, I think everybody understands that there is no solution to it with this kind of a thing. People have to get back on the table to find a solution to this. So I think that's why you find it very small. So Waldo, so I don't see any major, until unless it becomes out of hand and becomes nuclear. Then I think the devastation is very large. But we do not see that chance, at least in any of these.
I think there is still sanity in the political class, and let's hope that nuclear weapons are a deterrence and they are never used. Okay, so buy the dip seems to be a very sensible strategy that's working for quality stocks, quality indices, quality funds in the Indian landscape. Would you agree?
I totally agree with you. Basically, I think in this last, if you really look at it in April, when there was a major event like Trump tariffs came in and it surprised everybody, I think from then onwards, I think Indian market has recovered very, very strongly. So I think somebody who bought it at that point of time, I think they are up maybe 20, 30%, 15, 20% easily. So I think buy these dips has been a very good strategy to play in this current year.
Okay. I think, Nishchalji, over so many decades that I have been in conversation with you and learning from masters such as you, one has realized to keep it very simple: buy and hold, buy quality, buy that dip, and remain invested throughout. It's worked wonderfully well over the last 25 years in India, and let's hope it continues to do so in the coming decades as well. Now, coming to what is in front of us, first quarter earnings, they start in the first week of July. We are just a shade below the record high on the Nifty, and many indices are in fresh territory like Fin Nifty, like Bank Nifty. Now, what are you looking forward to from corporate India as far as first quarter is concerned? How do you drill down to outperformers or potential outperformers?
So I think at least the first 2 quarters of the current year is going to be muted. We have not
Okay.
seen demand as yet pick up, both on the rural as well as on the urban side. So I think the impact of, if you look at it, several government measures have happened. One, it started with the government coming and cutting taxes for the middle class. Second thing is RBI has been very aggressive, easing the liquidity cycle, cutting interest rates. I think these are all very, very positive steps, basically, if you really look at it from the economic point of view. I think all those things, transmission takes time, and those things are going to play out. Secondly, we have a good monsoon, a bountiful monsoon at the moment. I think that should also play out basically in the second half of the current year. So I think these first 2 quarters are going to be a bit muted, but the second half is going to be really good. That is what I see basically, and overall we'll end up with a 10 to 12% kind of an earnings growth for the current year.
Okay. So that's the broader, how should I say, game plan, that a 12% earnings growth should come in. What are the outperformers in terms of sectors according to you?
So there has been two buckets I would put in basically. One is bucket is basically sectors which have not done well for a few years and all, and basically they are doing a catch up, and that's largely the BFSI sector. So BFSI maybe in the first, I definitely believe because credit growth is still 9%. So you can't say that this is going to be a good quarter for them as far as top line is concerned. But definitely interest rate cuts are going to help them. And as the transmission takes place, I think this year is going to be good for them. But at least for the current quarter, I don't see a very strong earnings growth as far as BFSI is concerned.
Okay.
Similarly, I think there is going to be headwinds, especially for the IT as well as the oil sector. I think these are, if you really look at it, these are the top three sectors basically, if you look at it from Nifty point of view. So these three sectors, all of them is going to be a bit muted for the current quarter.
Okay. Mr. Maheshwari, very, very long ago, about 15 years ago, I overheard a conversation in an event where you were talking on, making quality reports at a time when great stocks are having terrible, terrible times because of no fault of theirs, but a sectoral headwind. Now, IT is going through that process at a time when Nasdaq is at a record high. Our growth is curtailed. Yet these are great companies, in particular HCL Tech, Infosys, Wipro, lots of cash on the balance sheet, no debt, great managements. The only thing is that we don't have, a vision beyond 6 months. How are you telling your top clients to navigate IT? Is this a time to get into them for the long term?
So there, I think, Shell, you have to be very selective. IT as a broad theme may not play out. I think IT, maybe if you remember our conversation, I think a couple of months back, when IT was in a worse kind of a situation at that point of time, I said it is too much negative has been built up, and it could be a good trading bet. I think that has happened, and the stock, most of the sector in the stock is up around 10 to 15%. But from here onwards, now you have to be very selective, and you have to look at basically where the earnings are going to come in, because valuations are no more cheap. But definitely, wherever there is a earnings visibility, I think you should be looking at it. So it's a very, very bottoms up thing, but a broad outperformance of IT sector may not happen.
So, what do mutual funds do? What do all those people who have been into TCS for the last 15 years, Infosys for the last 25 years, should they pare down their holdings substantially?
No, I don't think so, basically, because see, TCS and it's somebody who's holding these stocks for 10, 15 years, one is obviously the costs are very low. And today the dividends are such, basically they must be sitting on what kind of yield, 4 or 5% easily. And that is the kind of, because I think cash flow wise, these companies are very, very strong.
Yes.
So, and they are looking to pay out also. Like I'm saying, most of these guys have a defined dividend paying policy. So 30, 40, 50%, up to 50%, most of these guys share their profit. So I think that's a very good thing, basically, if somebody is a long-term holder and holding these stocks for 10, 15 years, because now their yields would be more north of 5%, because the prices are low. The second thing remains to be is basically he should, if he wants to diversify, he should look at a few of these mid-cap stocks which are showing a double-digit growth.
Okay. So, basically pare down if at all, and then shift to mid caps in the space where earnings and guidance are pretty good. Yes, the mid cap space has been an amazing wealth creator in the IT sector, despite whatever sectoral tailwinds we've seen. Coforge, Persistent, all of them have given multi-bagger returns for the last 5 years or so. When we look at the credit expansion that is likely to happen in the macro economy, Nishalji, what is your estimate when the RBI front loaded the rate cuts by 50 basis points? It also reduced the CRR by 100 basis points. How do you think the dynamics of liquidity plus potential credit growth will impact NBFCs?
I think it's positive for them. You look at it, one side, the liquidity has been very easy now. And the second thing is the interest rates are coming down, and they are wholesale borrowers. So they generally, they don't have access to the public. So they generally borrow it from the banks and larger NBFCs. So I think it's a win-win for them, basically.
Okay. What else are you not touching in the market? We've had a great rally in defense from March onwards till it's ongoing. Does it worry you that momentum as well as a lot of event-led issues have again brought this stock and this sector right on traders' desktops. How are you dealing with defense?
So defense, I think it's a totally no-go at these kind of valuations. Because one, you have to understand defense is not something basically that you have been able to put together a product or something that you will start getting orders from the next quarter onwards. It's a very long gestation periods. I have tracked something like a Bharat Forge. I don't own it basically, but given during my time
Yes.
as an analyst, I have tracked that, and they spent almost 8 to 10 years basically developing
Yes.
the gun.
It
And
had.
yes, they have got very strong orders, both on the both on exports as well as domestically. But then they had to spend 10 years. I'm saying there is a similar
Yes.
story of other companies basically. So people have to understand. Yes, these companies are doing very good work for the nation, for themselves also, but you have to be patient with them. You can't be running ahead of yourself, and that's what the market has done. They are running ahead of basically trying to figure out next quarter, next 6 months, and they are giving that kind of valuation. So I think all these stocks are totally avoid.
This is to say that there is a lot of froth in all names, irrespective whether they are PSUs or private sector, and the kind of froth that's happening in the unlisted defense space defies logic. Fair point, but don't you think, Nischalji, that it's this sentiment, it's this well, let me not use the phrase fond hope in defense because it's built on a lot of tragedies, is maybe a very long term story. You look at how Europe is trying to outsource from India. You look at how 5 or 6 defense PSUs have phenomenal order books and they are piling again and again. Don't you think this is probably a sectoral play for the next decade or so, if not more?
No, I totally agree with you basically. I think the kind of government focus is there. The kind of support the government is given, I think it's come up extremely well. You look at it basically, we hardly used to export to anything. I think today we are almost close to $5 to $10 billion worth of export every year. I'm saying
Yes.
that's a very phenomenal story, and I'm very sure this number will just keep on going up. The issue remains to be that that is already been discounted, and there are stocks which are putting at 100 times, 150 times. So even in case of defense PSUs, yes, everybody has a large order book, but what we have to understand is basically they totally depend upon what kind of allocation that year, one particular year, the government has in its budget to give it to them. Because this is not a private sector thing, basically, that some allocation is coming. These are like ships, frigates, submarines. They get built over a period of 5, 6 years. They don't get
Yes.
done basically in the next 6 months. So that is what so yes, large orders, but it will take time to get executed. And I'm saying basically keep those good stocks on the horizon, the likes of HAL, Mazgaon Dock, MDL. I'm saying all these companies are good companies basically, but they will disappoint in 1 or 2 quarters, and you'll get a chance to buy cheaper.
Wonderful. As always, I must relate this about Nishalji. He will never buy froth. He will only buy pain, and he will buy pain in quality stocks which have probably a secular growth trend. So, TCS, Infosys, large caps are quality stocks, but is there growth? We really don't know. But many such large blue chips, whenever they are in pain, they are always on Nishchalji's radar. Let's get clarity on this corporate capex as well, Nishchalji. Uh, one one thing that stuck on corporate India is that we haven't had fresh capacity expansion to the extent that the government desired. It had given them corporate tax cuts. It had pumped prime the economy on its side, and it's the corporate sector that's been felt wanting. Do you think this rate cut and excessive liquidity in the system may prompt maybe top 50, top 100, top 200 corporates to now open their purse strings and build capacity?
See, we have to look at a bit differently the kind of capex which the government does and the way the private sector does. The government is largely, it's a more of a beneficiary organization basically. It has to build roads, ports, and everything basically, and it looks for the general welfare of the people. In case of private sector, they are largely driven by a motive of profit. So all these companies, whenever they set up a new factory, whenever they set up a new capex, basically they have to assess how much demand, what kind of demand this market can take, what kind of capacity they are building in, and whether that capacity can be sold at a on a profitable basis. So I'm saying that is what I think is keeping these companies back a bit, given that the demand is not very strong in the market. But I'm very sure basically most of these guys must be having something on their boards basically right now to do expansion, because I think second half is going to be good for the demand.
Okay. How about FMCG and pharma? Do you still stay away because of broader valuations undergoing a time correction? There is no price correction happening anywhere. How are you positioning yourself or your clients within the pharma space?
So pharma, we have been positive and we have been having in our portfolio. Pharma, I'm particularly more positive on the gram space,
Okay.
because that China plus one play just continues to be there. We are seeing, when we speak to a lot of these CRAMS companies, we find a lot of them basically getting a lot of inquiries, and some of those inquiries are getting converted into orders also. So I think CRAMS is one space basically which is doing extremely well as far as exports business is concerned. What all US may do, but I think this one space, there will be very limited impact as far as tariffs is concerned, though I think the Trump administration has been threatening, saying that they would put in a tariffs, but you have to understand basically this is more of a seller's market, and the prices which Indian drug companies give, basically it is 1/10 of the price basically in the US. So they have very little options. So I do not see much impact as far as exports is concerned. The other space within the pharma sector is the healthcare, especially the hospitals and all. That sector is also doing very well, basically, domestically in India. So I think these are the two spaces, basically, which I've been focusing on.
Okay.
As far as FMCG is concerned, I think still there is no demand visibility. I think there is, as far as growth guidance, we look at it, most of the analysts, barring a few companies, all of them are in single digits. And the valuations are still 40, 50 times. It doesn't make sense to own any FMCG stock in your portfolio.
Okay. Nishchalji, based on your experience, especially the healthcare space that you say, hospitals, the government has been very gently nudging them, saying ki, sort out your act, otherwise pricing pressure is coming, or pricing caps are coming. You may remember an instance somewhere in 2007, 2008, the government clamped down on the cement cartelization. We've seen multi-year highs on maybe 5 or 7 top hospital stocks. Are they sort of poking the government to take action? What is your gut feel?
So I think you have to look at uh, uh, from a government point of view, basically, yes, socially, I think if a wider range of people can get healthcare at affordable prices, that is the important part, the affordable
Yes.
price. So I think government may push in basically. I think some of these procedures and all, which are at, I'm saying, costing whatever amounts basically. I think some of them are exorbitant. There is no question about that. So I think government will do its bit if if the profitability. I'm saying these, one has to understand that when you get into a healthcare, you have a social obligation also. You can't be
Yes.
just looking at a profitable profit as the only obligation. So I think they have to walk a tightrope here.
You see, look at how Narayan Hirdale, Apollo hospitals, uh, even if we see 2-year charts, they are multi-baggers in 2-year formats also. Rainbow hospitals, many of these stocks have given multiple returns to shareholders, which is very good. That's why you invest in equities. But there is a social and a socialistic angle to privatizing healthcare. Let's hope that sane sense prevails and we don't see any price caps on procedures or price caps on how much you can charge for a bed. Nevertheless, the insurance space for a change, Nischalji, is showing promise. Lots of stocks are record highs after the government changed the regulations to welcome 100% FDI in this cash staffed sector. Do you have any favorites amongst private and public insurers?
So I think insurance is doing well now, and this is like I was telling you earlier, some sectors which have not done well. I think the insurance is one of them. Now the surprise is basically that India, the penetration level is one of the lowest, and still insurance has not done really well basically in the last 4 or 5 years, and growth has been tepid, and there are several reasons for that. Basically, I think initially insurance companies were more focused towards products basically which are equity linked. Now I think they in the last 3-4 years most of them have got their act together, and now they are doing more insurance led products, basically life insurance, life coverages and all. Having said that, I think some of these companies are really doing well. I do not own any of them, but SBI Life is, I continue to like that, and LIC for it being very cheap. I'm saying it's the largest player in the sector basically, and the stock is really cheap. So I think these two stocks is basically my top picks.
And it has 10% holding in National Stock Exchange.
Yes, that's the I'm saying Sone pe Suhaga.
Kya baat hai. Mr. Maheshwari, because you bought it up on your own, that you own or not own a lot of insurers, how is your own portfolio? Just broad structures, what kind of stocks do you like? We've discussed so many times in life about how the market is and how it's going to go from here onwards. But what is your own personal choice when it comes to creating wealth for yourself?
So the way I look at the market and the stocks is one. I think one is definitely good governance is one thing basically. That is our top priority basically whenever we go out and see it. The second thing is the market only pays price for growth, especially in emerging markets like India. The participants are not willing to pay much basically for cash flows. Though you will find a lot of companies basically who has got huge cash flows, but market is not interested. So you have to find a combination of a good governance, good growth, and a reasonable valuation. These are the 2 or 3 factors basically I would put in. Once in a while, you will come across stocks where basically these cash flows are so strong and the market is totally ignoring them. And that is what is a value play.
Yes.
Though management may not be of the pristine quality, but the cash flow itself is very strong. You can't ignore it. So I'm saying, and valuations are very cheap. So I'm saying these are the kind of plays basically which I always look for.
Wonderful. And do you hold a very concentrated portfolio of maybe 10-15 stocks, or are you a player of diversification?
So 80% of my wealth will always be in the not more than 15 stocks, or even lesser basically. But there will be always 8 or 10 stocks basically, which will always be on my portfolio, because it's like I'm saying you want to. The way I typically invest is basically I'll never buy any 100% until it's coming through a block or something. But typically I would buy and hold on and see how the management, whatever it is saying, has continued to perform. And so those are basically on the watch list, and we continue to accumulate there.
Okay. And do you have a preference for mid caps?
I think when you talk growth, largely it becomes mid caps basically, but then mid caps is also today, I'm saying even a 30,000, 40,000 crore is a mid cap according to the new guidelines. So So those are pretty large ones basically now.
Yes. Nischal ji, one thing that Mr. Trump has said is that he would prefer a weak dollar, and the dollar itself has corrected from say 110 down to about 97, 98. In this broader context, how do you feel about allocations to gold and silver?
So I'm saying there are two ways to look at on gold and silver. One is obviously the currency and how interest rates are going to move in across the world, and the second thing is it's of its use basically. So silver as a commodity I've invested in, and gold obviously all of us own. So I want to make that disclosure basically. But silver as a commodity I've invested in, and I feel very strongly about silver because silver is now become not a precious metal anymore. It's more of an industrial metal. So whether it is solar, whether it is batteries, whether it's electronics, I think there are so many industries basically where silver is used, and silver has got only a finite production. So for the last 2.5 years, you have been running a deficit as far as silver is concerned, production wise, and the consumption continues to grow at 8 to 10% every year. So I'm saying somewhere where we say somewhere, and that's why silver is has at a price level also performed very well in the last 1.5 year. But I still see a good run for silver in the next 2 3 years. So I think that is one it's a commodity which is no more a precious metal now, and it is not driven by the interest rate scenario. Gold, on the other hand, is driven by the world economy. But what has happened in the last 2 years is more and more people, because they do not, or I'm saying countries, since they do not want to hold everything into dollars or dollar denominated securities, they are moving towards gold. And that's why we're seeing very strong demand. I do not see that changing. I continue to see basically that gold reserves are going to be built by other countries, and that will keep the prices strong.
Okay. Mr. Maheshwari, for those who are listening to you and would like to invest in silver, what would you suggest to them? Buy physical silver in forms of bars, maybe buy ornaments or utensils because they are still affordable relatively, or get into ETFs?
I think ETF is a easier one basically. You can invest as low as whatever amount ETFs. I think one unit must be costing whatever amount, basically 100, 200 rupees. So that is a kind of thing basically you can start the investment, because otherwise physical, you buy it, how do you hold it, where do you keep it? I think all that security and all issues are there. ETFs is the easiest one to do it.
Okay. With that, Nischal ji, thank you so much for your time. As always, we meet once or twice or thrice a year. It's such a pleasure listening to your very quiet and calm voice with laced with so much of wisdom. Have a nice day, and let's hope we see better days on the Nifty in the coming quarters as well as in the coming years.
Definitely, definitely. Pleasure is all mine. And I had told you, I think a couple of months back, second half, we are definitely going to see a new high in Nifty.
Yes.
It may come early only.
Yes. So we are going to get, Diwali on Janmashtami, baby. Let's hope that brings good cheer to everybody, including Nischal ji and to all those who are watching. Thank you. Thank you again once for your time, sir.
Thanks a lot.
That, ladies and gentlemen, was a market legend, Mr. Nischal Maheshwari. He's been on the Lal Street for the last more than 3.5 decades. Is looking forward to a new high in the market, prefers silver as an industrial metal now, and has a fondness for gold as well. In terms of stocks, there is a clear move towards the cramped space in pharma, healthcare and hospital chains. Apart from that, he finds FMCG very expensive, prefers mid-cap IT over large-cap IT, and of course feels that the liquidity as well as credit growth in the market will be far better in H2 over H1. I hope you enjoyed the conversation as much as I did, and let's hope that his prediction of a fresh record high on the Nifty comes fairly soon. Let's hope to have Diwali on Janmashtami.